If you are struggling with finding the high probability fair value gap, especially when there are multiple ones and in different directions, make sure to watch the video till the end, as I'll be giving you some fair value gap secrets and insights to be able to differentiate between the weak ones versus the strong ones. If anyone needs a one-on-one mentorship, check out the description. This is Mulham, and let's get into it. So I'll be starting with the Nasdaq 100 weekly chart, and from this we can see that price did react from a fair value gap in here, started going lower, but there is no reaction or there is no respect for this fair value gap right here. It's a bullish fair value gap. There was just a small reaction going up, then it was disrespected. So all people who were trading here and who were thinking that they can aim for 10R, 7R, 20R, they were not successful with this. What's the reason behind this? So something first to keep an eye at is at this leg right here, when price was going lower, there was no creation of a fair value gap. We have no fair value gap right here. So there's always a story behind the creation of a fair value gap. We see no fair value gap here. That also means something. That means that price is not willing to go lower. It wants to go up. So, going lower is not the right idea. Now, why did this fair value gap not hold? What's the reason? And if we can see on this leg right here, this whole leg, what are the fair value gaps that we can see here? So we had this fair value gap already filled, fully filled. We have this one. Yeah, there is this one too. This one right here. Price is approaching here and looks like price is respecting. And we also have this small fair value gap right here. Now we have fair value gaps in two directions. And we also have multiple fair value gaps in one direction, in the same direction. So which one should I take? Which one do I think that is going to hold? Which one is not going to hold? The answer to this is the higher time frame. So we are on the weekly. If we go to the monthly, the picture is going to be more clear. Let's assume that we have a price action like this, and we have a weekly fair value gap right here, another weekly fair value gap right here, and those are bullish fair value gaps, and we have a bearish fair value gap right here. This is on the weekly. If I switch to the monthly, for example, and I only see bullish fair value gap here, I don't see the bearish fair value gap. What is stronger? Is it the weekly or the monthly? Of course, it's the monthly that is stronger. So my bias would be to the upside, which means that I would know that mostly this fair value gap on the monthly, this is the real draw on liquidity. And this is where the real reversal is going to happen. It's always on the higher time frame. Monthly is stronger than the weekly, and weekly is stronger than the daily. You can apply this. You can say like, oh, I have the daily here and the weekly is going to be the real draw on liquidity. Now, if we apply the same thing here, what do we have? A lot of fair value gaps here. So how do I know this one is not going to hold? How do I know this one is going to hold? This one is not going to hold, whatever. Today's video is sponsored by Hanko Trade, one of the best brokers in the business with spread as low as 0, low commission, and you can trade all markets, including forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. I'm going to go to the monthly. So monthly chart, what do we see here? On the monthly chart, we can see no fair value gaps on this side and only bullish fair value gaps on this side. So we have this bullish fair value gap right here, and I'll put it on another color. We also have this other bullish fair value gap. Now, I can clearly see on the monthly, it's a better picture. It's more clear now. I can see that price is going to go lower only to mitigate one of those fair value gaps and then go up. How do I know where price is going to go there? Specifically, where exactly in the fair value gap? It's actually those fair value gaps on the lower time frame inside. It's just basically refining where price is going to go. So I did refine. We had a fair value gap on the weekly inside of the monthly fair value gap, and it's right here, and we can see that this is where price did respect the fair value gap. Now we can see that we have this weekly fair value gap and also this weekly fair value gap inside of what? The monthly fair value gap. So this is where I think price is going to go to. Now if we play the price action here on the monthly, or even if we go to the weekly right here, we can see that price is going lower now. Price did actually react from this fair value gap right here. So the first reaction was from the monthly fair value gap, or actually the weekly fair value gap inside of the monthly. So you see how we had this big range, but we refined it to this small range, and this is where the reversal happened. The exact same thing happened here. We had this big monthly fair value gap, but we were able to refine it with this fair value gap right here. This is what to do when we have multiple fair value gaps on both directions, or even in one wave, we have multiple fair value gaps. How do you know where price is going to react from? This is the way. How do you know what side is more favorable? Is it the bullish side? Is it the bearish side? The same way and the same method. This is how you differentiate between the weak ones and the strong ones. We can see that this is a weak one. Why? Because it's only on the weekly, it's not on the monthly. This is a monthly and weekly. This is a monthly and weekly. So price is going to come here and not here. This fair value gap will mostly not be respected. And we can see that it was actually disrespected here. Price came here and here. The fair value gaps that are inside of other fair value gaps. Another thing to look at is this. If you ask me this question, what fair value gap from all the ones that we have here is the highest probability? I have an answer. And it's a very easy one. And I always, repeat this over and over. Why? Because it's so important. Even though it's so simple, but it is so important. This fair value gap is fully filled. This one, does it have a liquidity above it? Yes, there is this one, but it's not the highest probability, or it's not as good as the others. What do we have here? There is this fair value gap that is unfilled. And what do we have here? A very clean liquidity level just above it. Just above it. So the closer the liquidity to the fair value gap, the better it is. Why? Because there is no time. Like, let's say it's like this. Fair value gap right here. And then there is this liquidity level right here. When price comes and takes the liquidity, price will reach both at the same time. Almost at the same time. And price will reverse immediately. But if it's too far, something like this, and the fair value gap is right here, price will close below maybe the liquidity level. It's going to go to the fair value gap, and then it's going to go up. So it's not two things at the same time. So you see the respect of this fair value gap right here. Why? Because of the liquidity level right here, just above it. So inducement above the bullish fair value gap and below the bearish fair value gap, this is how we find the highest probability. I want to see something like this. And it could be in two scenarios. So let's say we have the fair value gap here. It could be something like this. Price coming lower. And it is right here. See, that's an inducement. Price did now go into the fair value gap. And what's going to happen later is price coming into the fair value gap. And this fair value gap would be a very high probability. Why? Because it has a liquidity just above it. What's going to happen is this. And then price is going to go up. Another scenario is price filling part of the fair value gap and not able to displace above. What's going to happen is the same. We could adjust the fair value gap. Could be something like this. This is the unfilled part of the fair value gap. Or you could keep it the same. We can still call this an inducement. Why? Because it's a low inside of a fair value gap where the fair value gap is not fully filled. What's going to happen is this. Exactly the same thing. So we'd have a sweep inside of the fair value gap. Just like this. That's what we're having here. That's what's making this a high probability fair value gap. If I just switch to the left, you can see the same thing here. What do we have? Exactly the same thing that was happening here. If you see, I'm going to circle this from here to here. You see this? Exactly the same thing here. We have a fair value gap, not filled, but we have another liquidity level that is so close to the fair value gap. What's going to happen is this. Price sweeping the level of liquidity inside of the fair value gap, going lower. Exactly the same thing. Sometimes it's partially filled, just like this. You see, this is a high in a fair value gap. Price did sweep the fair value gap or the liquidity level actually and started going lower. This is how to find the highest probability. You need to have inducement if you really want to be sure about your fair value gap and how high probability it is. In my opinion, this is the most important point. Now, if we switch to the daily time frame, what do we see here? If I just go here, we can see that we had price going up, coming lower. Did we create a fair value gap? As I've said, the creation of a fair value gap is so important. It tells you that there is a displacement in the market and price wants to retrace to go lower or to go up, So what do we have here? We have a fair value gap right here that is created here. Now, this is the bearish fair value gap. Notice what's happening after the fair value gap. What is happening here? So price comes to the fair value gap. What do we see here? Another fair value gap created. So first of all, to make this very clear, a fair value gap that is created after mitigating a fair value gap is a high probability one. So if you have something like this, price coming into a fair value gap, price creating another fair value gap, this is a high probability one. The same thing goes for this. If we have a fair value gap on the higher time frame and price comes here, and inside of this on the lower time frame, we also have another fair value gap. That's also a high probability. But the better one is the one with the same time frame. right here. So what do we see happening here? Fair value gap respected right here, creating another fair value gap. This is the other fair value gap. Immediate rebalance right here at this high, immediate rebalance, and we see that price was going lower. When the fair value gap is not fully filled, what do we consider this? An inducement right here. You see how we have an inducement right here, and I can refine my fair value gap, or basically adjust my fair value gap to the unfilled part of the fair value gap, and still, this is still a high probability fair value gap. Why? Because of two things. First of all, we have this daily fair value gap that is respected, and creating another fair value gap that is also going to be respected. And what do we have? Another thing is the liquidity or the inducement below the bearish fair value gap. What happened here? Price basically coming into the fair value gap, going lower. And you see, even price, kind of went up, but still did not close out of the fair value gap, which means respecting the fair value gap. So price basically went lower, and you can simply see how price is respecting the inducement right here. Very good respect. And also the same here. Price did not close. Now, this is also a high probability fair value gap, but it did not get filled. This one. Why? Because we had a price respecting another fair value gap, creating another fair value gap. So this is a high probability one. Now we go here, the same thing. We had this big fair value gap. What do we have here? The inducement. And if I go to the left, you can see the respect of the inducement. Price basically closed one candle below, went up back into the range. Did we create a fair value gap? Yes, there is a fair value gap right here, which means that there is a displacement in the market. That's the first thing, but it did not get filled, unfortunately. What do we have here? We also have a lot of fair value gaps here. We have this fair value gap. Is this fair value gap a high probability one? No, absolutely not. Why? Because we had price coming back and respecting a weekly level and a monthly level. Actually, this is a monthly fair value gap, and this is the weekly one where we refine it. Price is respecting that weekly. What is stronger? A weekly fair value gap, monthly fair value gap together, or a daily fair value gap, especially after the sweep of liquidity? Of course, it's going to be the monthly and weekly fair value gaps. So this is stronger than this one. The context is on this side to go up. It's now with this fair value gap. This fair value gap would be disrespected, and we can see that it was disrespected with a displacement, which also give me another confluence that, oh, this fair value gap is not valid. The real direction is to go up. Why? Because this fair value gap was not respected at all. Price did close above it with another fair value gap, which is a balanced price range. And balanced price range itself is a high probability fair value gap. And I actually just saw this. We had this fair value gap after the creation of the other fair value gap. And I said, oh, this is going to be high probability. But now I see that this fair value gap was actually respected. You see right here? Very nice respected the fair value gap. A perfect and sniper entry right here into the fair value gap, going lower. Now, any fair value gap that is created after this, and I really want it to be an immediate fair value gap. So price coming here, a fair value gap here, I would enter. But we see that there was another fair value gap right here created after the respect. Like after some time, this one was also respected right here, and price continued going lower. But then after price coming into the weekly fair value gap, this is not valid. This is not valid. Nothing is valid. Why? Because the context and the time frame alignments is with the bullish scenario, with the weekly and monthly fair value gaps. And the last thing that I wanted to mention, and I know a lot of people and a lot of you guys are aware of this. What is it? Ignore all of the fair value gaps that had no liquidity sweep before. So if we had price just going up like this, and there was no liquidity sweep, and we have a lot of fair value gaps here, only take the ones that happen after a liquidity sweep. So let's say that we had a liquidity sweep here, fair value gap right here. This is the valid one, especially after price coming back into the range. We had the liquidity sweep, price going up, coming back, creating a fair value gap. This is the high probability one. It's not just randomly without a liquidity sweep. If we had something like this, and the liquidity sweep is right here, this is not going to be holding. Price will just go up. And here would be the high probability one. It's always after liquidity sweeps. It's even better if it was into a fair value gap. This by itself tells you that, oh, there is a displacement in the market. Price is going into that direction. That's where you enter. No liquidity sweep, fair value gap is not valid, period. So to give a summary very quick, because I know maybe there are some people who are confused and I really want to make everything simple every time. Let's say that we have this price action leg, and we have a weekly fair value gap right here, and we have a monthly fair value gap here. Where do you think price is going to go to? Is price going to respect this fair value gap? Maybe, but it's not a high probability one. There would be a reaction, but price is going to go to the real drawn liquidity, which is the monthly fair value gap, and is going to go up. Everything in here is going to be disrespected. And if we zoom in right here inside of that fair value gap, and we just go again. So this is the monthly fair value gap where price comes. If price is coming into the fair value gap, started going up, creating another fair value gap, this fair value gap would be a high probability one. This one is a high probability fair value gap. But if we had the same scenario, so the same level, monthly fair value gap, and we can see that price did go up, did not create any fair value gap, most likely this is not the real move. As we said, the creation of a fair value gap tell you the story. Price will mostly sweep another time. This would be an inducement. Price is going to go up, create another fair value gap. Now this is the high probability one, and price could do this, and this would be the real move right here. This is not the real move because fair value gap is displacement. Now again, the real thing, let's say that we have a fair value gap right here, and the price action was something like this. Let's say it's a bearish fair value gap, right? And it was something like this. And then going lower. And if it was just the same thing, but we had no fair value gap. So just like this, and there is a fair value gap, I would say right here. Which one is a high probability one? This fair value gap or this one? Absolutely, this one is a high probability one. Why? Because this one has an inducement just below it, and it's very close to the fair value gap, which means that there are two things that are happening at the same time, and price will go lower. This one might not be the highest probability, and it just can't go here. Price can sweep the high. So this fair value gap would not be respected at all. Make sure to go over the charts, go over all of the concepts that I explained today, practice them on the chart, see what you can see what you're struggling with to see. Practice this. Practice makes perfect. If you have any question, you can join the Discord. I hope you guys liked the video. Make sure to hit the like button, subscribe to the channel, and share this video with your friends. Maybe one of your friends needs this video and he's struggling with the fair value gap. This is Molham, and I'll see you in the next video.